Nvidia shares recovering today after closing down 5% on Wednesday. The chip giant has lost $900 billion since its all-time high back in June. This comes as earnings for some of Nvidia's biggest customers, those large cap tech names, have been a bit mixed. Our next guest, though, seeing some opportunity, saying that the volatility represents a reason to buy. Joining us now, we want to bring in Antoine Chakaiban. He is a technology infrastructure analyst at New Street Research. Antoine, it's great to have you here. So it looks like you recently upgraded Nvidia to a buy. You've got a $120 price target on the stock. And this comes at a time when it seems like many investors are still waiting on the sidelines when it comes to Nvidia. What makes you bullish at this point?
Thanks, Sean and Matt, for having me. So, yes, I would say that, first of all, since the peak of June, Nvidia stock has pulled back by nearly 30%. So that's underperforming most other semiconductor stocks that are exposed to data center AI. And the reality is that, even despite the concerns, the recent concerns on the company, the Blackwell delay, concerns around macro, we still expect Nvidia to dominate the data center XPU market. And we see in-house XPUs doing well as well, like companies like Amazon, Google are developing their own in-house XPUs. We also see alternatives to NVIDIA GPUs like AMD's GPUs also ramping, but we expect NVIDIA to remain dominant in a market that is growing very, very fast. And so I would say that we see little downside to expectations for NVIDIA's data center revenues. We see little downside to valuation, given the stock is now trading below the trough multiple of the 2018-2019 down cycle. And so that makes it a very good investment at the moment.
It's no secret that Nvidia has been the darling of the stock market for years, captivating investors with its innovative prowess and market dominance. Yet, the chipmaker's recent correction might seem like a plot twist worthy of a financial drama. The market has been reeling from a 26% drawdown from its June peak, leaving some investors wondering if the behemoth in graphics processing and AI technology might be losing its magical touch. However, analysts at New Street Research aren't just optimistic. They've just given Nvidia stock a shiny new buy rating and a price target upgrade to $120 per share. Why, you ask? It all circles back to Nvidia's not yet released Blackwell chip line, set to debut in the first quarter of 2025. According to New Street, this could be a game changer. So let's dive into the details. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
I want to talk about what we've heard from some of NVIDIA's biggest customers, as Shauna was mentioning. You've got Microsoft, Meta, Alphabet, and Amazon contributing about 40% of NVIDIA's overall revenue, and that's according to Bloomberg estimates. If Wall Street was frustrated by the AI ROI story that we heard from those four big tech names that I mentioned, couldn't that hurt NVIDIA too?
Yes, so I think the right way to look at it, so yes, you mentioned 40% of total revenues. NVIDIA actually also discloses, that the large cloud service providers represent, about half of their data center sales. If you look at how much CapEx for the top four hyperscalers is set to grow this year and next year, and you unpack that, between investments in AI, investments in traditional infrastructure, well, it's true that we still need to see a bit further revisions to what consensus is expecting for CapEx growth next year to make room for NVIDIA to be able to meet expectations, but not that much revisions, maybe 10, 15% actually. Yes, of course, whether CapEx can keep growing at such a pace beyond 2025 is a question mark. It will depend on the pace of adoption of generative AI-powered use cases. It will depend on the monetization of all the investments made over 2023, 2025. But reality is that even if we conservatively model a significant slowdown in investments in 2026, 2027 by these giants, that still makes room for good upside for all the names we cover exposed to data center AI spending. And so that's NVIDIA, of course, but also AMD, Broadcom, Arista, TSMC, Micron, and the list goes on.
Despite recent turbulence, NVIDIA's trajectory could best be described as a roller coaster that only goes up, albeit with the occasional heart-stopping drop. The recent plunge of over 26% from its June high might have some investors reaching for the panic button. However, New Street analysts consider this correction a healthy pullback, an opportunity for nimble investors to deepen their positions. In a market as volatile as today's, it's refreshing to see a bit of clear-headed optimism. Analysts argue that Nvidia's correction isn't necessarily a sign of weakness. Instead, it's more akin to a pit stop in a high-speed race, much needed to refuel and recalibrate before the next leg. As they put it, Nvidia is perfectly positioned for the imminent tidal wave of artificial intelligence, AI advancements, especially in the data center GPU market, a domain Nvidia practically has on lock. Let's tackle the looming question. What's so special about the upcoming Blackwell chip? To fully appreciate this, one must understand the current state of the semiconductor landscape. With Nvidia at the helm, the industry has been riding high on the AI and machine learning boom. In-house chips or XPUs are gaining traction, but Nvidia's upcoming Blackwell series promises to overshadow them. New Street analysts put it bluntly. We see in-house XPUs doing well against GPUs and being deployed in millions across gigantic in-house captive markets. Despite the noise around potential competition from advanced micro devices, Nvidia's prowess seems unchallenged for now. The key takeaway here, though, lies in analysts' skepticism about new market entrants making any significant dent. None of these players will put material pressure on Nvidia's dominant position. Moreover, New Street's confidence is buoyed by comprehensive data and a plethora of market analyses. They've crunched the numbers, dissected the trends, and concluded that even the best of Nvidia's current competitors, like AMD, can hope to be competitive at most, matching Nvidia's GPUs perhaps roughly once in a product cycle. So how does the sentiment on social media and among analysts reflect the broader market view on Nvidia's competitive position and growth prospects? Hello everyone and welcome back to Investocracy.
Just mentioned a moment ago, and that was the fact that you're not too worried about the reports of Blackwell delays. I guess I'm curious as to why. Why is it that you see that as a limited setback at this point?
So yeah, just to put a bit of context, the Blackwell is a chip that's designed with CoWoS L. It's a packaging technology by TSMC that is being used in Blackwell. That's different from what was used in Hopper, where it was CoWoS S. And so that involves like high density local silicon interconnects and redistribution layers to improve the die-to-die interconnect density so that the two dies can speak to each other very, very quickly, very, very fast. And so the integration of these components into the substrate has resulted in issues like thermal mismatch and warpage. But reality is that Blackwell is a cutting-edge chip. It's pushing the boundaries of packaging, and it was brought to market very, very rapidly by NVIDIA. NVIDIA is accelerating its product cadence. So inherently, there were risks of delay. But that being said, we still expect NVIDIA and TSMC to bring Blackwell to market with acceptable yield and volume in 2025. And in the near term, NVIDIA can mitigate the situation in many ways. They can extend the life of Hopper. They can release a single die Blackwell chip. And so, yes, maybe the shipments will be more weighted towards Hopper in the second half of 2024 and early 2025. But we still sense enormous and urgent demand across the board, and that mitigates the risk of a pause in shipments as customers wait for the next generation of chips to be available in volumes.
That's akin to saying the competition has a right to exist, but not exactly a right to win. When one peruses the social media chatter, it's evident that market sentiment echoes this analytical data. Analysts and investors alike have been vocal about their bullish stance on Nvidia. Take, for instance, this tweet from MarketWatch. Nvidia's recent stock dip is not a panic button but an opportunity. With new AI advancements on the horizon, Nvidia remains a must-watch. But it's not all sunshine and rainbows. The transient uptick in Nvidia's stock value following a global sell-off illustrates the fragility of current market conditions. As of the latest metrics, Nvidia enjoyed a 3.78% rise amidst a broader market downturn, adding to its impressive 116% gain year-to-date. Yet, many analysts caution that this could be the calm before the storm. With speculations swirling about an impending market crash, the outlook for Nvidia, and indeed the entire tech sector, remains uncertain in the short term. Still, one must place this in context. Nvidia's storied history of resilience and innovation prescribes a measure of confidence in its future trajectory. After all, this is the same company that revolutionized gaming graphics and catalyzed breakthroughs in AI and deep learning. The market has a habit of overreacting to short-term headwinds while undervaluing long-term potential. Nvidia exemplifies this divergence, embodying the mantra that temporary hiccups don't define enduring success. Furthermore, it's crucial to note that Nvidia boasts robust financial health. With a market capitalization north of $500 billion, strong revenue growth, and consistent profitability, the fundamentals remain solid. Nvidia's recent earnings report highlighted a revenue uptick of 101% year-over-year, primarily driven by its data center and gaming segments. Coupled with the impending release of the Blackwell chip, these factors consolidate Nvidia's position in the tech firmament. Returning to the analysts' optimistic stance, it's enlightening to delve into their rationale. According to New Street, the AI revolution is not just a transient wave, but a profound shift with long-lasting impacts. Nvidia is seen as the linchpin of this transformation. Their proprietary technology, advanced R&D capabilities, and strategic partnerships place them in a unique position to dominate the burgeoning AI landscape. Additionally, despite potential headwinds, Nvidia's strategic pivots have paid dividends. Diversification into sectors like automated driving, edge computing, and even healthcare have provided multiple revenue streams, buffering against market volatility. Simply put, while Nvidia's stock may face short-term fluctuations, its long-term value proposition remains compelling. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
In our final minute here, how big of a risk is the potential economic slowdown that we're hearing teased out? I mean, JP Morgan this morning not only raising their likelihood of a recession this year, but also raising their recession likelihood to 45% chance in 2025. To what extent does that macro concern impact your view on Nvidia specifically?
So I think that for 2025, you can, things are fairly well set. You can look at things from multiple angles. We talked about the hyperscalers CapEx earlier. We know roughly how much they expect to grow CapEx. Plans are already set, they already have a plan to train, the next generation of GPT models and the next generation of Gemini models. I think here there's probably limited room for much changes in plans. You can also look at the supply front, and we know that CoWoS capacity, that high bandwidth memory capacity is going to make room for NVIDIA to meet expectations. So I think 2025 is fairly well set. Now, yes, if we enter a recession, if the macro deteriorates, what happens beyond 2025 is still a big question mark, and we could end up in an AI winter. We could end up in a pause in investments, and that, of course, remains a risk.
An AI winter that could come with a recession, but sounds like you're definitely not pricing that in for now, as you still think Nvidia is a buy. Antoine, thank you so much for joining us and breaking that down for our audience. That was Antoine Chkaiban, a technology infrastructure analyst with New Street Research, joining us on Nvidia.
As the market currently stands, Nvidia is a story of strategic resilience and innovation. While Nvidia stock grapples with a 26% drawdown from its summer heights, the bullish sentiment from analysts like those at New Street suggests this correction is more an opportunity than a setback. Their upgrade to a buy and an impressive price target of $120 per share underscore a deep-seated confidence in Nvidia's future, particularly with the imminent Blackwell chip line promising to reshape the GPU and AI technology landscape. The prevailing consensus is compelling. Despite the transient jitters, Nvidia's fundamentals remain robust, buoyed by a diversified portfolio and relentless innovation. As the company navigates through this patch of market turbulence, the long-term outlook shines bright. With revenues surging and market dominance in key sectors, the Blackwell chip could be the catalyst propelling Nvidia to new zenith. Yet the market is inherently unpredictable. While current analyses forecast growth, it's prudent for potential investors to stay vigilant, making informed decisions based on comprehensive data and market trends. Nvidia's trajectory, though promising, will inevitably experience peaks and valleys, a reflection of the broader tech sector dynamics. In closing, it's worth pondering. Where does Nvidia stand in your investment portfolio? As analysts present a compelling case for Nvidia, the ball is now in your court. Will you ride the Nvidia wave and capitalize on its next phase of growth? Or will you sit on the sidelines? The stock market is, after all, not just about numbers and analyses. It's a narrative of vision, strategy, and occasional leaps of faith. So, what's your take on Nvidia's journey ahead? If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.